Hello and welcome to Brickwork Ratings, yet another Vodcast series, which is a Diwali special. So let me take a brief moment to introduce to my very special guest today, Mr. Ajay Manglunia. He's the Managing Director and Head Institutional Financial Institutions, JM Financial Products. Sir, welcome to this session. A very happy Diwali to you and your family.
Yeah, thanks a lot, Ria, and a very happy Diwali to you as well and your family and the entire Brickwork team. It's nice to be with you guys today and wish you personally that it's a year has seen so many ups and downs, and finally we see the Diwali and
True.
there is some festivity around and all of that. So happy to be with you guys. Thank you.
Yes, sir, the festivity is already behind you. I can see some bells and stuff, behind you. It gives me that festive mood. So let's start the session very lightly on. Just wanted to understand, how do you read the debt market sentiments at this moment from the issuer's perspective plus the investor's sentiments?
So debt market is currently at a level where everybody is most comfortable. If you look at it, the issuers are happy because they are getting long-term money. They are getting the required resources at a much affordable rates. The short-term rates are way low. I'm not seen in the last 10 years the short-term rates being so low. Today, most of the corporates have been very happy borrowing from the money market for working capitals at interest rates around three quarter. And today, I don't know whether you have noticed the CBLO rates were about 2.5%. So there is enough liquidity, and even the longer tenor rates like 10 years PSUs and AAA papers and all, which earlier used to be kind of sticky around 8.5 kind of a level till last year, are trading at a yield of about 6.5 levels. So the interest rates are pretty low. Issuers are happy, and investors obviously happy because they have been kind of having a lot of mark-to-market gains in their portfolio, because everybody doesn't sit on the cash completely, and they all have been staying invested. The state loans and especially the RBI measures in the recent times have been very helpful in terms of keeping the market calm. RBI has not done anything special, but the steps they have taken are much appreciated, and those are really innovative. We have never thought that central bank, especially in India, will start buying state loans to correct the disruptions in the yield curve, or central bank will start doing the OMOs on a weekly or fortnightly basis for state loans and government securities. So there is a supply, and especially with the pandemic effect, the government securities and the state loan supply, because the revenue has been shortfall, and in order to meet those revenue shortfalls, government has no option but to borrow a little more than the usual. So they have upfront declared that they are going to borrow so much more, and the market was slightly jittery, but then RBI came out and they kind of provided enough liquidity to the investors in the sense of so that they don't feel like how to buy the papers. And at the same time, they have been kind of supporting markets by way of doing the long-term repos and OMOs and all of that. So that has really helped the investors, and issuers both are happy at this current juncture. And I see that this environment, guidance from the RBI in the last carry policy was that the interest rates for a slightly longer period of time, maybe for a year or so. It's a clear roadmap that they are the short-term, the interest rates are likely to remain soft for some more time.
Great. Sir, we already understood how the prevailing sentiments have been. Would like to understand, how do you see the roadmap going ahead? Are we seeing a revival coming in soon?
So revival is not very far, Ria. If we see that the first quarter was really bad and most of the people were skeptical, they never knew how long this pandemic is likely to be. Initially, everybody thought it's 1-2 months and things will get over. Nobody imagined that this is likely to last for 8-9 months or a year. It looks like now people are more prepared. And in the second quarter onwards, people have taken it that this is likely to exist and we need to coexist with this pandemic environment. And people have learned to deal with it, and people have learned to coexist and start working. So if we see the results, especially from the corporate world, the results are not so bad. Results are encouraging. We have seen a lot of companies in the first quarter struggled on the profitability and the productions, but in the second quarter onwards, they are absolutely at the normal. We will very soon see the second half of this year to be a growth oriented, and especially the next year looks very promising. We can see a double digit growth rate in the next financial year, definitely for that.
Great. Sir, before we try to evolve around more things, would like to understand any lessons, learned from this pandemic, or any suggestive measures you would like to say for pacing up this revival?
So this pandemic has given us a lot of learnings. Like we need to think about anything unknown. You can prepare for the known things. You can prepare for the known risk and all of that. But this has kind of given you a teaching that you need to be prepared for any kind of unseen environments which can probably come in without notice. And most of the corporates have learned that they should prepare themselves. Nobody imagined that for about a year or so, people can work from home and still get the efficiency out. So it's just getting out of the fear, getting out of the comfort zone, and making sure that we quickly get adapted to the changes in the environments and all of those. So I think India has, especially the businessmen in the India and the machinery in the India, has fought so well with this corona pandemic that if we look at it, the other part of the world, India is at a much better footing. Looking at its current population and the kind of effect it has, it's much better than, and it will take quickly to revive and quickly to get back to the growth path. And people's fear is receding. So it's not that people are more fearful about it as initially they were. So the things are that one should prepare, one should have liquidity, one should have a lot of other preparedness for unknown stuff. And anything can happen, but we need to be sure that we need to survive. So that is what it is.
Great. Sir, I think you covered each and every point I could actually ask you from. So without questions, you answered all my questions. It was really great understanding the debt market during Diwali. And I really hope this, pandemic cycle is all over very soon and we'll have the normal us back, wherein we
Definitely,
physically meet
definitely.
and we'll greet each other. So
Thanks a
for
lot.
now, we have to do the virtual greetings.
Absolutely. Thanks a lot, and wish you a very happy Diwali.
Same to you, sir. Thank you so much.
Thank you, Ria. Bye.
Bye.